Every Monday morning at 7:15 a.m. Pacific Time, in my live streams, I am fully revealing my proprietary safe wheel strategy for free. Using my 28 years experience, I've developed the safe wheel strategy to cancel out the risks associated with the normal wheel strategy. I also designed the system to only need my attention once a week on Mondays and on rare occasions Fridays. And this is what I call a level 5 strategy. Now what you see on the screen is the trader matrix. I developed this to make it easy to distinguish between trading levels. After taking over 30 online stock and options courses, I've found that I'm the only level 5 trader that is not using portfolio margin. Portfolio margin is used for large accounts over $100,000. Now after 28 years, I've only found one edge in trading, and that is selling option premium. Level 5 trade systems are the only way to sell option premium efficiently and safely. For a better explanation of the 5 trading levels, see the link in the description for the video called The 5 Stages of a Trader.
Okay, let's get started today. First I want to do a sound check. So if you can hear me, please put it in the comment section. Okay, maybe you cannot hear me because I do not see you. Okay, yes, you can hear me. Good. All right, so first thing I want to say is make sure that you post your questions early. You can post your questions now. That way I don't miss any of your questions. We get towards the end and I start winding things down and you ask a question. This thing is on maybe a little bit of a delay and sometimes I miss those questions. All right, next. Let's talk about the earnings edge alerts. What happened last week? Last week, everything went pretty normal. We went with BABA, and you can see here, the stock BABA, and made $300. So it was a pretty normal trade, and I should write these stats down. I think I'm 13 wins out of my last 15 trades, or something like that. So it's doing pretty well. I am seeing an edge there, and the edge is still there. The edge hasn't gone away. And so as far as the overall account, we're up about $1,274, started with $5,000 at the beginning of the year. So just year to date, the account is up 25%. So I would recommend that you subscribe to the Earnings Edge if you're interested in something like that, where we trade once a week. We trade a stock once a week with options, of course. So you have to have a little bit of options experience to get in there. And that's what I would recommend. All right. Next, I want to show you my P5, my Premier Level 5 account. Now, one of the things about the Premier Level 5, I know that you've probably heard me talk about Ron Bertino's course, because it is the best course out there. There's no doubt about it if you want to learn about options and get to that next level. And I'm one of the original mastermind members, and a lot of the seasoned mastermind members, they'll ask me for my trade plan. They've asked me for my trade plan, and they've asked me, how do you make adjustments? What are you doing here? What are you doing there? Because they see me sometimes making money when they're not making money. And so that is the advantage of the Premier Level 5. I mean, this is the highest level trading that I think is out there, period. And because you've seen what I've done with turning $110,000 into over $200,000, and you saw me do it right in front of you. So obviously, you know, I have an idea of what I'm doing. Also, right here, we're just about at break even. We started about a month ago, a little over a month ago, probably 5-6 weeks ago, with $30,000. We're at $29,800 approximately. And let's see here. But you can see when I got this started, we started right in here, and you can see that, you know, we've had a significant downturn, and we've been able to just kind of hold break even, which is really good actually in a market like this. So I do highly recommend the P5, the Premier Level 5, if you have over $30,000. It's time to get conservative. Okay, let's get into the safe wheel. See if I can get to the right spot here. So what happened last week with the safe wheel? Now, I think that Macy's, I'm pretty sure that they had earnings last week. I don't even know. So it doesn't matter. Like the safe wheel doesn't matter whether you're coming in earnings or not. With the regular wheel, a lot of traders trade the regular wheel. They do not want to be in earnings. They don't want to be there. So when there's earnings, they get out if they can, right? And a lot of times what will happen is they'll be stuck in a stock. So for example, their break even might be $100 a share, but they're in the stock at $90. So they can't get out, and earnings are coming up. And now they're stuck because let's say the earnings are bad and the stock goes from $90 down to $80. They're stuck in earnings. Okay, that's another huge advantage to the safe wheel, is that you don't have to worry about earnings. I wasn't even sure that Macy's had earnings last week. Like, it doesn't matter. Okay. And it doesn't matter what stock you're trading now. So let's talk about the wheel. So what happened last week was, it's either last week or the week before, I sold the $20 put and I got a sign. Okay. So I own 100 shares of Macy's at $20. And I also have my put hedge on, and you can see my overall position is up $100. So even though Macy's went down pretty good, I guess. I don't know, did it? Somebody mentioned that. Let me see here. Yeah, it looks like it went down pretty good last week. Yeah, so you can see it was around this $20 range or what have you, and now it's around the $17.50 range. So it did go down. I don't really come in and look at it until Monday morning. I don't pay too much attention to it. So Macy's went down pretty good. Does that bother me? I mean, no, it doesn't matter. So I got assigned. So what I want to do is be able to sell this $20 call for at least 20 cents or $20. So now I know that I'm below that $20 level. So in other words, I want to be close to $30, the stock itself, or above 20 or below $40. So I know there's a situation where if I were to get out of this position, I would change the stock that I'm using. I'd probably go to BP. If I were starting over, I'd use BP right now. But let's see if I need to start over, because I may or may not get taken out of this position. If I cannot get any premium over that $20 strike, any decent premium, then it's time to layer. So I'm not even really close particularly to getting out of this position. So just because I'm below $20 doesn't mean it's like, oh, I'm going to get out no matter what. No, I mean, I'm still going to have the system play out. Okay, so let's see what's going on. Remember, we're looking at this $20 call, and we want to use this cycle here, the one that expires Friday. That's the one we're dealing with. And so I'm looking at the calls, and I'm looking at $20. Oh, I can get well more than a 20 to 25 cent premium here. In fact, I can go all the way to even the $21.50. But I typically like to take, if I can get like $30, I typically like to do that. So I'm going to sell this $21 call here. I'm going to do one. Make sure you have one because I'm doing 100 shares. I'm doing a $5,000 account. If I was doing a $10,000 account, I'd be trading two. So you can scale this thing up. So let's see, mid price 30. I'll go with 32. And work this down. Okay, so it looks like we sold it at 31. Now the next thing to do is to protect our put hedge, the 3 puts that we have. So I'm going to buy something for $5 or $6. This one I probably wouldn't get it. I might be able to get the 25.50 for $6. I'll try $5. See, make sure we get that right there. I have my setting to default at 10. I'm going to make a note of that. Default 1. Okay. Okay, got that for $5. All right. So probably a lot of you might have thought, well, it's below $20. He's going to get out of this position and start over. No, I'm going to wait till I let the position play out. So that's the position playing out. And on the safe wheel, doing the calculations, year to date, it's up about 21%. So that's good. Obviously better than the market. And it's doing better than normal. Like you know my back test. If you've seen anything about what I said about my back test, it averages around 10 or 11% a year. So we're doing quite well this year. Macy's has been good to me, or good to us if you've been following. Okay. Oh, also, if you want to know exactly when or how I'm trading, I do have what I call the safe wheel guidelines, and it's a flow chart and some guidelines. So it'll tell you exactly what to do, when to do it, because you might be able to follow all my live streams, but there's probably a lot of scenarios that have not occurred yet. So if you want to see every possible scenario, then you would go ahead and get in my live chart, my flow chart, and you can see a link in the description for that flow chart. I haven't raised the price on that yet. I may raise the price. I've been thinking about it, but I'm going to leave it where it's at for a little while. Okay. Now let's get into the questions. See if I can get this here. Walter, good morning. M, clobbered. And he sees the value in the long puts. Absolutely. If I didn't have long puts, I would be down pretty good on this particular position. So it's always nice to have those long puts there. That's why it's called the safe wheel as opposed to the regular wheel. All right. Underground sausage. Wow. Not sure what you're referring to, but cool. All right. Alan says, how about BP, MRO, SU, HPQ? Well, I can look at BP real quick just to kind of go through why I would pick another stock. Let's see here. So if I put BP in here, first thing I want to do is check for liquidity, meaning these bid-ask spreads right here are very close, very tight. That's very good. If they're far apart, it means there's not as good liquidity. You want the most liquidity you can get. BP is very good stock. The price is close to $30. That's where I want to start. I would definitely use this. And I'd look 150 to 200 days out. Can I get something? Can I buy those long puts? Yes. So BP looks like a decent stock. I'll just look at MRO real quick. MRO. Oh, this is pretty good. Good liquidity. Let's see what the price is. 27, yeah. Yeah, this would be a good one. This one was not bad. So yeah, you're on the right track. All right. Next question here, Jerry. What was your biggest percentage loss with the earnings alerts? We had a 20% loss on one trade, and even my back test never showed that. So that was a very interesting situation, and it can happen. Okay, and it's only happened once. And in fact, there's a good possibility that we could make 20% on a trade too, because we don't keep we don't put GTC orders, we put limit orders. So at the end of the day, that order expires. So the next morning, if there's a big move in that stock, we can come in and sell it and make big profits, like 20% profits. But I haven't done that yet, but it's possible. Question: what other trading channels do you recommend? Um, Really just Tasty Trade. I like David Jaffe too, because he's honest and he's trustworthy. Um, but I've done quite a bit of reviews, and there's been a couple positive reviews, some semi-positive reviews, mostly not positive reviews. But Tasty Trade is a great place to go if you want to learn things, and you learn them for free because their business model is set up that way. Right? They're not trying to hide anything in order to make money. So they're telling you everything they need to know. Most of the options educators out there, I'd say 99% of them, are selling you something that you can get for free. And you can get it for free at Tasty Trade. So that's why I recommend them, but I would not trade like them because I've made a video about the Tasty Trade. You should check it out and you'll see why. You'll see why I would not do that. Oh, 3 days to M earnings. Okay, well, the earnings are coming up then. Okay, great. Maybe that's why the premiums are so high. You know, being able to get that, 3 strikes away and still getting that 50 cents. Yeah, good. Doesn't matter to me. Macy's goes down 20%, down 50%, up 50%. I'll be fine either way. Okay. Can we see the overall P&L for the wheel? For the wheel. The safe wheel, you mean? Let's see. Am I in the safe wheel account here? Yeah, this is it here. Here's our overall P&L. $6,044. Started with $5,000 in the beginning of the year. Okay, JMS 54. Hello. What about LVS? Does it go through the filters? Let's see. LVS is trading at 33. Yeah, that's close. Yeah, I would. LVS looks like a good candidate. LVS does look pretty good. There's quite a few candidates out there. And it doesn't matter which one you pick. Oh, as long as you can get the premium of if you're out of the money and you can get 1% or better. This one's got a lot of premium, so this one worked quite well. I didn't really check the premium on that. What was it, MRO? I don't remember. Yeah, MRO has good premium too. Yeah, these are all good stocks. Okay, next question. How much money are you up on the wheel? Yeah, right there. It's $1,150, or approximately 21%. Okay, let's see. What is this? I got lost here. All right. Do you normally wait a little while after the bell on Mondays to avoid the big movements? Yeah. I mean, with the safe wheel, it doesn't matter. But I always like to let the market open. I usually look at my accounts about 7:15, around 7 to 7:30, and I'll make my decision on what I'm going to do. And then even if the market, let's say that I'm not, let's just talk about the P5, the premium level 5. Let's say that I need to make an adjustment. Well, I'll check and see at around 7-ish, between 7 and 8. Do I need to make an adjustment? And I'll make it. If I don't need to make an adjustment, then I won't make one, even if the market changes and like at the end of the day, oh look, now I should make an adjustment. I don't make it. I just wait till the next day to make the adjustment. Pretty much. I mean, there's rare occasions when I might do that, but for the most part, I just look at my account once a day on the premium level 5, and then of course the safe wheel, I just look at my account once a week, and just quickly on Fridays I have my alarm set for Friday afternoon just to look at the end of the day to make sure that my long call is not in the money, and if it is, I'll sell it. Okay, Eduardo, do you think there's something special about the stocks in this range to make the safe wheel work? Or may it work at any price levels? It'll work at any price level, but the way that I've sized my positions is to trade it around that $30 levels. So I use about $5,000, and I use one contract, and I want to be around the $30,000 level. If the account is or $30 level, if the account or the stock is at $60, well then it kind of throws off the sizing aspect of things, right? And I can figure it out and extrapolate it and all that kind of stuff, but I did my back test based on that type of sizing, so that's the reason why. If you understand the sizing and how to size, you can use any stock that you want. But $5,000, you're going to need more than $5,000 to trade a $60 stock, right? You're going to need $10,000, right? So that's the reasoning behind that. What is the max drawdown on the safe wheel? That's a good question. Typically, you must be talking about a cycle that loses money, because once the cycle's over, you start over. I haven't seen. I don't know. I'd have to look that up, but maybe 3%, 5%, maybe. I'd have to look it up though to verify that, but not very much. Next question. I like BP, so buy the October 25 put, sell the 31 put. Yes, so BP, what is it trading? BP 32.25. So take about 80% of that. So 32.25 times 80%. Yeah, $26. I'd go around the $26 range for my strike for my long 3 puts, and sell. Which one would I sell? Or actually, I would sell a put. Let's see which one. Well, I want to get at least 30 cents minimum. So 31.50 is cutting it close. You could do that one, or the 32. I'd probably sell the. Well, it's right in there. Either one. But the 31.5, that's probably the one. Yeah, you'd probably go with that. Yeah, so you're pretty close. You're right in there. 3 puts in October, right? So the 3 puts, you want to be between the 150 and 200. The October one would work, sure. Okay. All right. Matthew, thanks. Just bought the flow chart. Ran into the normal wheel problem with NVIDIA. Yeah, NVIDIA, there's, if you're in NVIDIA right now, let's say that your cost basis is, I don't know, $100 and you're down to 90 or whatever it is, you're coming into earnings. So what are you going to do? You're just hoping and praying that earnings look good so it goes up. So you're directional. And whenever you're directional, you're adding risk to the equation. The goal is to be non-directional, because to pick a direction and make money off of that, I haven't seen really anybody be really successful at that. I've been asking people whenever they come to me and they say they make money day trading, I'm like, okay, show me that prove it to me that you're making money day trading, and they never do. Maybe there is someone out there making money day trading, but they don't prove it to me. So I can afford 200 more shares. Would you do the safe wheel in NVIDIA if it was you, or use a lower price stock? Well, if you understand sizing, you can use NVIDIA, but I would stick to the $30 stocks because there's no reason not to. Is remaining time on the put hedge too short? Once it gets under about 100 days, that's when I start thinking about how am I going to get out of this thing. I'll roll it. But that typically doesn't happen. Usually you're out of the cycle before you get to 100 days, because you want to be over 150 days when you start the cycle. Okay. Royal match, thanks. You're welcome. Okay, let's see here. How would you recommend for the safe wheel? How much would you recommend? Well, I recommend $5,000 in order to get used to it, to understand it, to get to run it for a while, to really know it well. And then after that, then you can size up. Next. I've been using Dash, and it's worked out great. Dash. I don't even know what. Is that delivery service that I use? DoorDash? Yeah. Let's see. Wow, they've got some well, yeah, so you're at this higher level, so you got to make sure your sizing is in check here. That's why I wouldn't use it. I don't want to get confused about my sizing, but if you understand it, you're good. Or Dish. Oh, not Dash, Dish. Okay, Dish. So you're starting to get to that level where it's getting a little bit low on you. And these are not as liquid, like there's more. See how this is 15 and this is 30? So this is, it's not bad. It'll work, but I would prefer a little more liquid stock for this. But you're still making it work. You can make it work. Okay. Universal items. Seems that it is not free. Costs $59. Yeah, for the safe wheel, for the flow chart. But if you want to follow me and do exactly what I'm doing, that's free because it's here live. Okay. Joel, on a new trade, how long do you go? How low do you go? Oh, 80% of the current price. So whatever the price is, multiply it times 80%, and that's the strike you want to go. That's how low you go. Mark log. What would be the downside of closing the position, taking the $100 profit, and starting over again with another stock? No downside. Go. That's not a bad idea at all. That might work fine. I'm just sticking to the strict rules, but if you want to take profits and start over, that might even work out better than what I do. Nothing wrong with that at all. 100% would do 2% of the 10% daily. Yeah, I mean, nothing wrong with doing that, taking profits and starting over. Especially when you're out of that, $30 range, or I should say below 20 or above 40. Is it better to enter the trade on Friday to get the full week, or next Monday? The problem with entering on Friday is that you would have an existing position open while you're opening the other position. And then you could get into margin. It's possible to get into margin problems doing that. I want to have a total clean position coming in on Monday, or I either got assigned or I didn't get assigned and there's nothing going on, and I'm not overlapping positions. The P5, what's the maximum drawdown? The maximum drawdown I've seen is probably about 4 or 5%. Um, when the market crashes, it will go down with the market. If the market crashes 7%, it's possible that it could go down 7% that day, but it will recover very quickly. And so it has drawdowns. Now, I'm redoing some of the calculations on my back tests, but the calculations are difficult to see right now, but I'm almost have those ready. But it could be up to 5 to 10%. Let me just say that. Even I've seen the synthetic dragon, which is very similar, down 14% at the highest that it's ever drawn down, but it averages around 20%. And at one time it was down 14%. So those are the kind of numbers that I expect to see, but I need to redo the back test. Or not the back tests themselves, but the calculations after I did the back test. I'm doing those. Why not take the long puts profit and reposition? You can do that. There's no doubt that is not a bad idea. It's just not part of the rules that I have set out, and it's not a bad idea to do that at all. Can you show us example on AAPL? Yeah, I mean AAPL. Probably one of the most liquid stocks, if not the most liquid stock. You know, you've got good liquidity, you've got good premium out of the money, but you're $140. So now you got to size things properly. So what is that? 4 times 3 is 120, 5 times 3. I mean, you got to be dealing with $25,000 to deal with this stock and trade one contract. So the sizing kind of is off, and that's why I like the $30 stock, because it doesn't matter which stock you choose, as long as you have that liquidity and the premium. James 3-5, not sure what you mean by that. James, is what I drew down for a loss. You drew down. What'd you draw down? I'm not sure what you're referring to. Next. ZZ. Can you create a video on what step you take to make a profitable strategy? The steps I take, I back test. I have an idea, a thought, and I back test it. And then typically what will happen within my back tests is that I'll realize, oh, this isn't working right away. Here's the problem. So I'll tweak it and I'll start my back test over again. And then I'll go for a little while and I'm like, wait a minute, there's a problem over here, problem X. Let me solve problem X. Solve that problem, start over. Oh, now I have problem Y. Okay, problem Y. Let me try to solve problem Y and X at the same time and start over. And then I just keep doing that until I don't have any problems, which I think is pretty rare. I don't know if a lot of people can do that or not. I just have a lot of experience, basically. Been doing this for almost 30 years. So I can kind of identify those problems. And I can identify what I need to do to tweak those problems. And that's what I did with the Safe Wheel and all the systems that I've created. What is the losing scenario? I'm assuming with the Safe Wheel, we haven't lost money yet. Usually when the stock goes up, right, and it's typically not when we get called away, not when we're long stock, but maybe when we first sell a put, maybe we sell it, we make 30 bucks, and then we've got the put hedge on, and the stock goes up, and the put hedge can lose more money than that $30 that you made, because you go up significantly and the put hedge is losing money. and then you're already at a loss, but you're in the system, right? And you've got to roll that put hedge up, and then you go through the cycle and you maybe break even in the cycle or what have you. So overall, the position could lose like that. I hope that makes sense. Jerry, instead of diversifying a 100K account, I think that this is better strategy with one stock. Absolutely. You don't need to use multiple stocks with this system. Yeah, just use the one stock. That's the one way that I create my systems. I make sure that they are simple. I don't want to get complicated here. Like with a traditional wheel, you might have 5 positions. It just makes it more complicated. You know, it's not that complicated, but still, it's a bit easier to just use one stock. Eduardo, thank you very much for the Safe Wheel playlist. Watching all and learned a lot. You are welcome, Eduardo. Shannon, is the 80% based on the stock price, or is it based on your sold put price? It is based on the stock price. Sharon, thank you, Carl. I also bought your flow chart. You're welcome. Cool, thanks. Iraqi trader. You're welcome. Let's see, James. Someone was asking what the drawdowns were if you had a losing cycle on Macy's. That was the loss, about $200-ish on the first contract cycle. Okay. So $200 on a $5,000 account. You know, what is that? 1% or something? Not even that. So yeah, pretty low drawdowns. And that's the key to a lot of these trading systems, or to any trading system. Keep your drawdowns low, because that's how you preserve capital. And if you can preserve capital, that is the key. And that's why we talk about level 5 trades, or I talk about level 5 trades all the time, because you've got to preserve your capital. Low drawdowns, that's the key. James, the put hedge was where I lost money. I bought them on a day the price was down on the range, probably the lowest point. Yeah. So again, that's what I talked about. Well, how can you take a loss? Well, you get into a position where you're selling a put, and then you buy the put hedge, and then the put makes you $30, but the put hedge loses 90 or whatever. You know, that kind of thing. Okay. Are there any other questions? Yes. Okay. Universal items. Why do you need 3 put hedges? Would one do the job? No, because there's a possibility to be long 200 shares if you go into your second tier, and you want to have more puts than you do. You want to have a higher amount of puts. And the reason is because they're further out in time, so their delta is lower. And if you own 200 shares, you know, that's, you know, your deltas are fully allocated to where your put hedge, it's further out in time, so it doesn't increase in price as fast as something that's at the money, or if you just are holding the shares. So you need to have more of them. And I found that the optimal amount is 3. Okay, Guy. All right, Guy. You're my favorite guy. Always have something interesting to say. Okay. Jerry, on the loss, would you sell the whole position? Okay. On the loss. Yeah, I mean, you're going to sell the whole position over. You can, because you're going to have to roll the put hedge up anyways. So in essence, you are starting over. You know, you're not long any shares. You've got to roll that put hedge up to keep it at 80%. If it goes down below 70%, you want to push it back up to 80%. So it is like starting over. All right, thanks. Okay, thank you guys. I'm going to wrap this thing up. I don't see any more comments. One thing I'd like to say, if the P&L is not real, what else are they trying to conceal?